Good morning. Welcome to Forex in Four. Today is Friday, December 2nd, 2011. Alrighty, we're starting out here looking at the euro. Just on a 5-minute chart. So you can see the action's been fairly muted overnight, but we've had a nice steady move higher here until, boom, we get into the U.S. session. Now we're starting to move up a bit. Well, what's going on? Well, we've got non-farm payrolls today, and I think the market's got a pretty lofty expectation here that we're going to go ahead and we're going to beat on these numbers. Now, we're expecting a change of about 130,000 jobs. We're expected to have been added, all right, but the unemployment rate is expected to remain steady at 9%. I think some people think that those numbers could change to the upside, and now we're getting these early bets that this could be the case. So you can see euros moving higher. Show you S&P futures here real quick. Okay, it's also moving higher as well. We're now up in the 1260 range. All right, and we've got oil moving higher as well. So it's risk on so far this morning, which, to be honest with you, I always hate when this happens because, especially when it comes to the non-farm payrolls number, because we know about what's going on in the economy. We know that employment's bad. You want to see that jobs are being added, that the economy is getting better. But when I see chart action like this, it usually tells me that the opposite's going to be the case, and that perhaps I want to fade this early up move. All right, and maybe there's going to be a little bit of disappointment in the market. So we have to keep an eye on that. I'm not going to trade ahead of this number. I'm just going to kind of watch it. And usually what I do is I wait for the number to be announced. You see that initial reaction, and then try and take action from there, whether it's buying into a trend on a pullback or whether it's fading that trend if it gets overextended. So those are going to be the two ways that I'm looking to do things this morning. Just want to show you some other stuff. Let's see here. Dollar CAD. All right, you can see here dollar strengthened versus the Canadian dollar. They actually had their employment report that came out earlier this morning, and they unexpectedly lost jobs. 18,500 jobs were lost. They were expected to have added 20,000 jobs, and their unemployment rate ticked higher from 7.3% to 7.4%. So that's not a good number. But I'll show you here yesterday. I put up the chart of the day saying that we were closing in on parity on this pair, and you can see that we were, okay, prior to this number. But look at this little candle right here. When we look at this on a longer term chart, this is a 2-hour chart. All right, this looks to me like to be a little bit of a blip here, right? So it's a bad number, but we still could be approaching that parity level. So even though Canadian unemployment was bad, does not mean that they can't go to parity with the USD, especially if the dollar has weakens because we get better than expected non-farm payrolls reports. So that's what the markets look like they're setting up, and this could be a time when sometimes the expectation is going to outweigh the actual result, and there's going to be a time when perhaps the expectations are right. I mean, you don't always have to fade the expectation, but sometimes it happens. Just want to show you Euro Swissy here. This is interesting. Yesterday, move on Euro Swissy. Okay, you can see this move right here, and the Swiss franc weakened dramatically versus the euro. Well, what happened? Well, yesterday we talked about the what was it? Bear with me one second. GDP figures in Switzerland came in worse than expected, 1.3% versus 1.8%. And then there was a rumor floated right around this time that the Swiss National Bank, the SNB, was going to go to negative interest rates to try and weaken the Swiss franc. So essentially, negative interest rate means more or less you're paying to keep your money in Swiss francs as opposed to them paying you interest. So that was a rumor that was kicked about. Haven't seen anything to the contrary or that says that it's true, but you can see that major spike happened there yesterday, and that was one of the moves. So what else do we have? So we got risk taking going on this morning. We got the Aussie moving higher. I'm just going to go back to the 30-minute chart. You can see here. All right, Aussie moving slightly higher, getting back up to this 103 area, which served as a little bit of resistance before. Okay, and we have dollar CAD. I'll let you look at it on this chart, moving down towards parity. Now I'm just going back to the euro real quick. Sarkozy and Merkel, have been meeting, and there's a little bit of optimism in Europe that they're going to be able to get their act together. They're talking about fiscal union before they can do euro bonds. I mean, Merkel's she's just walking away from euro bonds as much as possible, and she made an allusion to or a comparison from this euro debt crisis to running a marathon, and how it's going to be a long process, and how the troubles start as you get further along. Well, from the looks of Merkel, it doesn't look like she runs too many marathons, but aside from that, all right, she's saying that this is not a sprint and that they're committed to trying to make the fixes that are necessary, but they need to have this fiscal union taking place where the sovereign nations get their debt under control. So there's optimism from there, and frankly, we've talked about it. The markets just seem like they want to go higher at this point. We've just, look at this, we're just coming up here on euro, and we're just breaking out of these new highs. So perhaps we are going to get a nice pop, but maybe could be some selling going into the weekend. I mean, it's kind kind of thing where there's still risk in the market. Okay, we still know about the euro problems. They just had this vote in Egypt, which I think they're saying something like 70% came in for the Islamist vote. That couldn't make the United States happy, I imagine, although you never know. There's also, the rumblings going on in Iran. So there's a lot of risk still out there in the marketplace. I mean, just even if we get a good non-farm payrolls report, doesn't necessarily mean that, boom, things are great and we want to be off to the races. But if we look at euro, we also had a little bit of a producer price numbers came out earlier, okay, and they came in less than expected, so that was a good thing. And then lastly, I'm going to show you in the UK. You can look at the pound, same chart really. They had their PMI construction figures came in better than expected. So that's really been the news of the day, and it really boils down to non-farm payrolls. Again, 8:30 a.m. Eastern Standard Time, expecting 130,000 jobs to have been added, and hopefully we can move the needle off of that 9% unemployment. So that's what I've got for today, gang. Have a great weekend and good trading to all.